Hello, 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 everyone. Happy end of day Monday. How is everyone doing today? Hey, Sashi. Good afternoon, Patrick. Good afternoon, Amit. Good evening, Charles. Hey, hope everyone is well and in good health. As long as you did not try to short Bed Bath and Beyond, you are doing fine. Hey, Daniel. There are a lot of spikes in these markets. Where's Future's Edge? Well, it's still in post production for some reason. I guess there's no rush to get the one I'm on out, so I don't have any control over it. Yep, more stock buybacks with Pinterest, big gap down after a crappy earnings report by then. By the way, if you haven't liked the video yet, please like it. Now I can see the likes and how many people are viewing. And there's a big discrepancy between viewers and likes. Hey, Anissa. Good evening, Jacob. Remember, Mike can see the likes now. Exactly. See? Now people better start liking it. Oh, boy. Hey, Martinez. So you can do whatever you want. But I can see the likes now. Good afternoon, Donald. All right. We also had quiet day, but I did not see Bostic was speaking, and still a chance of avoiding a recession. But base case for Bostic is two more hikes, and what else was it? And the terminal rate could go up if it's continued with strong data. So you got to keep that in mind. We got Powell tomorrow, but they're already starting to somewhat talk it like the market's, whoa, whoa, whoa. Just because we dropped to 25, we can keep going. And if market's still coming in strong, we can even put a 50 back on the table. So let's see if Powell keeps reinforcing that. Hey, options 22. But people, here's what I'm worried about. This is why I want to see the secondary reaction, especially if Powell comes out a little hawkish tomorrow. There's been a lot of put positioning going into Powell. So let's put the puts on before Powell. Well, let's see what happens with the market. I mean, we have the triggered minor bearish patterns. No major bearish pattern triggered just yet. Nothing. Good afternoon, Sterling. So, tomorrow, 7:30 Central, balance of trade, imports and exports, red book, 7:55 Central. Economic optimism, the minor one at 9 Central. Big thing is Powell, 11:40 Central time. 11:40 Powell, speaky. And then 1 p.m. Central, bar. And we had Bostic this afternoon. So the Powell one will be much more important, because he's got to see the market's reaction after the press conference. So let's see if what he tries to stress, and if he comes off more hawkish, or at least tries to reinforce what Bostic was saying. Fed's Bostic is necessary. The Federal Open Market Committee could return to a 50 basis point hike. Telling the market, hey, we can always, if stuff and inflation's not going down, we can go back to a 50 basis point hike. But at this point, I'm priced in for two more, which is probably two more 25s to take it above 5 on that terminal rate before the pause, which we started to see. Let me jump to Fed Watch. Fed Watch again this afternoon of favoring that 25 for March, and glancing at May, 73 for another 25 in May. So that's what's being reinforced even by the Fed Watch tool. Now, you had some pullback for some stuff that ramped last week. Tesla was up strong again today. Apple, a little pullback. You got a little rotation into some defense, aerofit space and defense, mixed in healthcare. Overall, a choppy market day with some more profit taking and pullback moves in technology and comm services. Fear and greed. This will probably drop a bit with this minor pullback, but we're still up here. Greed, extreme greed. So that's why I'm still cautious. Now, could this thing bounce back tomorrow? Sure. Pinterest was a miss. I did not get a chance yet to see Activism Blizzard. I was catching up on other things, but I did take a look at Pinterest, and it was a gap down for pins, and they're doing, you know what, you don't have anything better to do than buy back more of your stock. That's what all these tech companies are, just let's keep buying back our stock. Well, if we get into a substantial bear market, it's not going to hurt Apple that bad, although it's a complete waste of money. But a lot of these other tech firms can blow a lot of money on stock buybacks with the stock decreasing. So, key support back on Pinterest is about 2250 area. All right. Where are we sitting? Where are we sitting? Hey, Sterling. People playing the Fed will be caught pants off. He's going to say something stupid again. Well, let's just see. People are playing the Fed. As I said, people are trading the Fed more than they're trading the markets, and stuff is absolutely priced for perfection. And we're in an earnings pullback again, as getting reinforced constantly this earnings season. And that generally doesn't last one quarter. So, what, you bailed a little soon but took a profit, and well, it's your trade. It's your trade. Well, a win is a win, yeah, but if you're constantly cheating your profit targets, and if you're constantly cheating your reward to risk, that can come back and bite you over time. I've seen too many people cheat their profit targets. They get away with it, but then they take their losses are full size, but then their profit targets are edging down, and then adjust your reward to risk. So just be careful. And if you skew that too much, even if your win rate stays constant or even goes up because you're pulling things a little earlier, if you skew your reward to risk, it's going to hit your trade expectancy, and over the time, it can have a pretty substantial effect. So a win is not a win. If I take a $100 loss and a $1 win, even a bunch of $1 wins, but I take a $100 loss, a win is not a win. I've seen a lot of people ruin their account. I'm not saying that's what Sterling did. I'm just advising people from that mindset. A win is not necessarily a win. A win is, you got to base it. I mean, if I have a huge loss and 99 wins, and one huge loss can outsize a bunch of wins. I've seen people with 90% win rates, but they take huge losses when they do. And sometimes those huge losses overrules that 9 out of 10 wins, especially if they own a proper position sizing. So, hey, Happy Jack. Thoughts on Adani news? Yeah, I mean, I've followed it pretty close. I think there was a lot of fraud there. A lot. I think it's gonna unravel substantially for that. TS Ombi Mitchell. ESL looks like it's flagging. So far, it's a little flag. Extended pullback. I'm really focused on this 4094 target going overnight at least. We have that double that is triggered. This is why it's slightly lower probability, because we've already pulled back to the rotation zone, but hardly a dent made in cycles, hardly a dent made in overbought. This doesn't even return it to the weekly rotation zone yet. So probabilities, though, still favor more of a pullback. But as always, there are no guarantees in this fun trading atmosphere. So what am I using for overnight? I'm pretty much using the harmonics. Let me switch colors right here. Let me switch colors so you can see the short-term ones. So again, this 4130 key resistance. I don't care if things spike above it. That's the target area, because you see we could not get a close above there. Next target is the same as this morning, 4143. To the downside, I'm using this 4100, then 4094.50, then 4075. So nothing's really changed there. going into the overnight session. But we have so far got a 2-day pullback back into the rotation zone on a low basis, not a closing basis, although we have 15 minutes left. But there's nothing that's going to push it down there for the NASDAQ. For the NASDAQ, still off the rotation zone. So I'm still focused on this 12,356, 12,3. What is the exact level? 12,352. Same difference for me. Let me just make this match the other ones. Same difference for me right now. Just using the harmonics. The major one I'm watching is 12,580. You can see spike, spike, no key close above it. Dropping down in the support 12,457 area, and then nothing to 12,352. If you were going to use projections, if you're trading shorter term, again, this is completely valid to use your forward harmonics at this pausing area. What is the technical low? Let's see. 12,457.25, 12,457.25. They're the same low. So when it's the same low, it doesn't matter which pausing area, but I always like to look at the 4-hour, and this would technically be the pausing bar. So intermediate, this is where you'd use 12,395.75, and then you'd have a target area, although I favor the double target right in front of the harmonic target, but they're close for a clustering zone. So that's about it. That's the exact thing I have it mapped out for tonight's session. Dow, still nothing. Dow, just, I'm not even bothering. Not even bothering. Russell continued to pull back, although that, took off and hit that first target and could not get the close below it on the higher time frame, at least on the 1 hour. You can see on the 15-minute, but every time it's bouncing back, there was buying pressure here. Still, next target, 1955 and then 1946. But this is the move down and has reduced the stop. So not only can we use the same harmonics for the stop level, which invalidates the pattern, which would be a close above 1994.40 or a trade through 2001. Now remember, as this continues to go down, it's going to continue lower, but these are the same harmonics that will be used for overnight, like this about 1972 area, then 1979 to the downside, this 1956 to 1955, then 1946. All right. All right. I'll get to some Dr. Michael. Hello. Oh, hey, Sonic U. Hey, business person. I stole that. That just cracks me up. We got business person on the channel. DAX coming back straight to that rotation zone, and you can see those prior two high areas. So that's key. If we start breaking below this, actually the level I'm going to be watching for a breakdown play in the DAX is 15.3. If we break into that, I'm watching for closer to the other side of the rotation zone. Right now, there's no point in doing reverse harmonics just yet. There would be the forward harmonics to the upside, but the major thing is still 15.718. The notes going in. When it gets this close at the end of the day, I do like to lower the stop level already because it's so close, and that's a stop level trade down. So 115.05 on a closing basis is the stop now level for the trailing area, and then it can be even more aggressively brought down should this continue to roll over. Now remember, we have daily cycles at the top and weekly cycles are still headed down, so this could easily run into this key support area. Easily. So there's not much left to do there. On a shorter term basis, this is where I will watch the shorter rotation zones. especially the 4 hour in case we do pause or get a slight bounce. We'll watch for the 8 EMA to connect with price before the next push down. Dollar index continue its move higher, closing in on that 50-day 103.50 area. The technical high was 103.41. So that's where we stand. Would not be surprised to see some kind of pause or pullback here, but nothing yet. On the weekly, remember, this can run for a bit. I'm still going to watch for a pause or a pullback, but we can easily go with weekly cycles to the top for quite a while. This could end up being a couple 2 to 3 week move at least overall. If it's shorter than that, it still means there's a fair amount of weakness in the dollar index. At this point, it would just be watching the pullbacks, and my first pullback area would be about 102.68, 102.60, 102.70 area. Other than that, not much. VIX still. Remember I said I'm watching above 20. We're not above 20 yet on a closing basis. Crude, little trying to get a short-term bottom. The only thing I'll be watching for tomorrow is a quick %B buy, which would be a trade above today's high. And that would be a very scalpy trade only, and only carried through if it closes above the high. That could only be something, and I'd use the harmonics back to 75.79, and then about 76.50. So that would just be a little scalpy play. Why? It's broken down. It's going against the rotation zone, and it's got the overhead resistance from the channel it just broke down from. So unless you're a super scalper, that's not something you want to look at. Not much to talk about with natty gas. Gold, just a pause day. The yen still that 50 basis point for the bonds just sitting there. We got the follow through and the close right at the harmonic. Again, I'm watching for topping patterns in this, but there's nothing yet. Nada yet. The next major area is about 134.70 in the yen, but would not, without a topping pattern, look to short this yet. Euro. Finally a 3-day pullback. This is the first 3-day pullback since back in November. And closing in on a key breakout area. So this is going into some pretty decent support, 106.65 to about 107. So I'm watching for a bounce play, but not a new long play. Not a substantial new long. Key resistance is now the prior breakdown area at 108.56. So it would just be a bounce. I'm watching for the continued bigger pullback. We got weekly cycles finally rolling over, and we've reconnected with the weekly rotation zone, but we can easily pull back at least this 105.80 area over the next little while. So nothing I'm going to stand in front of there. Pound, I'm watching for a bounce, but same thing as the euro, a bounce and then a rollover move, and then I'm going to see if it triggers the bigger double top pattern. So just be patient with that. Bitcoin, still sideways consolidation. We'll get to some other stocks in a second. Tesla inside day. The double turned into a triple. So nothing really to do there. It's now getting into this triangle, ascending triangle pattern. And with the extended move here, I'm going to see where this takes us. So on the break above 194.86, miners about 200 to 201, then 203.10, and then your major levels 208.24. You break down, this is why I can't stand triangles, but you break down, the first target is 190.42, because even if you break down from the ascending triangle, you're running into some key support and the rotation zone. Can't else, I'll only start taking notice below 186.70 again. All right. hold on. Let's see. Let's see. What other stocks? What other stocks? I got to scroll back up. What are my thoughts about Amazon at 100? 100 will be key psychological support. Amazon is still, I mean, fundamentally, I hate the thing. Technically, you got the hundreds right in front of the rotation zone. Until it really starts breaking below, early warning is below 99 on a closing basis. Then the only key support, you got in the support range, you got to get 50 right there. But you start breaking below 99, I will be watching for short setups on the rallies. Right now, that's about it. The daily cycle still rolling over, but not some major technical damage is not done. I'm watching for a more substantial topping pattern on any pop up. Okay, but long term, I'm watching for another substantial rollover play. Short term, I'm not getting in front of it right now because of the nature of these markets. It's got to do some more technical damage. We got a rising trend line with a defining point back from the 25th of January. You have the rotation zone. You have a key breakout level at this 99. So would I just buy it against 100? No. If it pulls down here and sets up like a %B rotation setup, this is not my favorite stock. I'd rather play a %B buy or a rotation buy in a stronger stock, not an Amazon. I'd rather wait for this to bounce and look for a short play, personally. ABBV earnings. Any thoughts on it? I mean, going into earnings, I assume you mean. It's trading against a very key breakout level. And at this point, this was on the weekly. That was a double, just in case somebody's going to ask. The double that already a long time ago went to target. So right now, here, what you don't want to see, let me put the reverse harmonics on real quick. I mean, yeah, the retracement harmonics, not reverse harmonics. Retracement harmonics, because you are close below 62.5. So this still has downside probabilities in play. Don't know, have any idea what it's going to do with earnings. On any earnings pop, I'd watch for a roller play back at the 200 and into the daily rotation zone. If it has a, remember, stuff's been missing. The larger the crap and the crappier the earnings, the bigger the pop it's been in this earnings season. It's chasing this high beta crap again. So, if they miss, would I be surprised to see a pop? No. But I'd be watching then for a rollover play. Your next minor level is 142.60, which you do have some, besides being a harmonic, you do have some key support down there. And then I'd be watching for that return to 87.5 just over the next few weeks, even if it does pop, which is 138.34. So the PDE isn't ridiculous right now on it, but still, that's the stuff. There is no great bottoming play just yet. You get down here to 87.5 to 100, you have a fair amount of key support. That's why I'd be patient. I wouldn't risk something going into the earnings stuff because, again, unless you have knowledge of how the earnings reports are going to be, because I don't. But I'd be looking more so here with a tight stop if you're interested from a bull side. A bull side. Where you got to be careful is if you break down below about 132 on a closing basis, especially a weekly closing basis, you're into a clear path move. and you could then see a quick drop. But as long as it holds against this key support, that's where I'd be watching for any long play. And then if you break down from those levels, it could be a nice little short play into that clear path move. It's got an okay dividend. I mean, 4%. Not shabby, but there, if you want to do a dividend play, again, I'd be watching down here more so, because there is no major reversal. Now, it could still get some kind of bottoming play. You pull back, you form a little micro double bottom into earnings. That'd be a different story. We don't have one yet. What are my thoughts on GE? Generally don't think about GE that much. I used to trade GE a ton back in the day. A ton. And then it went so far out of favor. I mean, the last thing that I have up here was from the double, which is over, of course. And now it's just this wedging up pattern. So what are my thoughts? I would not be chasing it here against major resistance with cycles at the top on the weekly and rolling over. I'd be watching for a pullback play in here. Because this, historically, this little kind of pattern with a stair-stepping divergences down, so you have 3 push higher, 3 lower highs on the RSI, that is a pretty reliable topping pattern once you break the daily rotation zone. So would it be a buy up here? No. I'd be watching for a pullback move at least before touching this from the long side. Is this a potential very sloppy double top? It's very sloppy. If it pushes up here again, it will be invalidated, and it's got a little hitch in there. But this could be used if you're looking for areas for a pullback trade. So if this were to trigger, I'd be more interested to starting to look at something back down to 75. Start to look for something. And that would take it back into the weekly rotation zone. You got also, you see weekly is overbought. Cycles at the top. This is not something I'd chase here. I would not try to grab a penny to risk $1. CVX has a little mini double bottom. Against, and this is where we'll use conservative targets because it's against the daily rotation zone. So on a close above 171.55, you got 173.64, 174.68, and I would even bump down the final target to about 175.35, right in front of that 175.73. Just remember, you are holding decent support here. You are holding the support. I would not try to front run this pattern. The good thing you have going for you is on the daily, you have cycles at the bottom, trying to turn up. Weekly still, so you're fighting the weekly cycles with the daily cycles. So that would just be a potential little scalp trade, nothing long term. But it is holding the support level, so stops can be pretty tight on this because it rolls over again. You do have a gap still left behind down here, back to the 162.72, and you do have the 200 lower at the next breakout level. So the next breakout level, see here, resistance, resistance. Why I marked it here is that's a key emotional candle close. So, and it happens to correspond right with the 200. So that's going to be, if this rolls over again, that would be the next area I'd watch for a potential bottoming play. If it breaks through that, I would not be looking to touch it until down between the 50 and the 62% harmonics. BAH. Booz Allen Hamilton. I used to trade a fair amount of this too. 98.41 would be a daily close above that for a potential double bottom trigger. Daily cycles at the top, weekly cycles at the bottom. You know, if this could pause and roll over and not ruin this yet and keep this a potential double play and then rotate back up again, this could be a very interesting double play. When's dividends? The 9th. That's something I keep an eye on. And by the way, for risk reward, I would not ignore this second target, especially that second target, because you see this breakdown area. So you had key support, broken. And it happens to be the second target. So in structuring my trade, when I see something like that, I develop my reward to risk based off that second target when I see something that strong. Even though it could very well go to that third target, I like to make sure my reward to risk, that second target, is structured correctly. So that's a nice potential setup. And if you look down here, you have prior resistance becoming validated support and revalidated support. NVIDIA, nothing's really changed. It's just so far sideways correction with the rising rotation zone and one of the key support levels, 203.65 with the rising rotation zone. So, and it's triggered the inverse head and shoulders, so it's still, nothing's changed with those targets as we've talked about before. So even on a pullback, unless it's a really substantial pullback and this thing comes crashing down, it does not invalidate, even though I can't stand it from where it sits fundamentally. It's got the technical pattern. Just like AMD still has the, after hitting the first target on the double, just a little 2-day pullback. A 2-day pullback. You had this little sloppy minor double coming back down and just holding right in front of that final target area. So, still not caught up with the rotation zone though. This thing can still easily pull back to its 200 and it won't invalidate that pattern at all just yet. Pavneet, TLT is broken and retested the downtrend since 2021. The bond market shows it has had enough of the down move. Why should we think it will not affect equity markets positively as well? That's... I mean, you've not got the major pullback in here. So, and things are trading on the shorter term. I think this will probably stay in a range here. Why should we think it'll not affect the equity markets are priced to perfection from a fundamental standpoint. And for this soft landing, blah, 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 blah. That's why it's tactical short-term trading still for me. Can it still run higher? Yeah. However, you know what? I'm not looking at a correlation between this kind of longer-term bond pattern and the market direction. I'm watching the shorter-term bills and the notes for clues with that, not the TLT. at all. The only nice trade in the TLT is if it gets a close on at least a daily basis, preferably a weekly basis above 109.88. Then it could be a really nice long play again. Other than that, it could theoretically stay in this range for quite some time. GNRC. Nothing really, as long as you hold above about that 115.75 area, you paused against the weekly rotation zone. Pullback, you start breaking down below this 115.75 area again, this little run could be over. But until there, in the short term, there's no re-entry signal yet that I follow, but I watch if against this key support we get a re-entry signal and a rotation back up. I then use the retracement harmonics on this pullback to raise stops, but there's nothing yet from my perspective. Yeah, that's double topped. This, let me look at this though. Yeah, oh no, we could. It's almost. That's really sloppy. That's almost invalid. But there's below 72.61. Back into the rotation zone only. I would not be playing that as a short. I'd be watching for those levels too because it's a lower probability kind. I'd be, especially where copper's still sitting, I'd be looking for these pullback levels for potential reversal opportunities. Doesn't really change things for me because the only way I trade GE is technically. Doesn't really change things for me at this point. What do you make of Google after gapping up and triggering the double bottom? 3 consecutive days of gapping up that closed green for that day, but below the previous day's close. Any significance? No? So far, an orderly pullback. The only thing today is closed back below the 200, but you know, after this breakaway thing and gap down, gap down, gap down, just getting out of this overbought conditions. I mean, as long as this holds, it's still tradable pattern. And until we get the stupid out of the market, a lot of stuff can keep running. It's finally coming back and reconnecting with its daily rotation zone. I'd be watching more so if it completes this other gap. That's where I'd be really focused on. Again, you remember we have between the peak and the candle body, it's really nice to see on the weekly basis, and now look where that is, right back to that gap. So I'd be watching for a potential reversal play for a backup move right around here for a pullback kind of entry if one occurs. Don't have anything set, any great setup just yet. Over the next 4 to 6 weeks, I want to see how once we get a secondary reaction. A secondary reaction. Overall market, I mean, longer term, you know, I'm still bearish. Shorter term, besides this pullback move, I'm watching for a secondary reaction. We can still get some more upward price action on the secondary reaction. That will help me gauge the strength of the market, but we have a lot of key support. So besides any bearish plays, I can't get over short-term plays. I can't get overly bearish until we really start breaking below this 3,800 level. Can't do it. Because there's too much key support in here. And we still have nutty market conditions as here's you go, multiple halts today in Bed Bath & Beyond. Company missing its interest payments. So it's going to get interesting. But until we get this kind of crap out of here, trying to do all these short squeeze things in companies that are going to file bankruptcy, we're still in silly market conditions chasing high beta stuff. And we still have bullish patterns triggered in a lot of stocks. Thanks for posting that, Jacob. That'll be interesting. Quadrupling the levy on corporate stock buybacks. I've been an opponent of these stock buybacks for years. I'm not going to get into that right now, but you know what? Don't get me started on taxing everything either. I went through NVIDIA. I looked at crude. Earlier. Aggressive %B buy above today's high and only held through to close. If it closes above there, but it's for a little pop. 75, 79 area, and then potentially back to 77. So it's only aggressive from a scalpy point of view. There's no longer term buy setup. I'm still watching for support back down in here in the 70 to 71.50 area. Yes, we have J Powell tomorrow at 11:40 Central Time. I covered that at the beginning. Do not ignore that. 11:40 a.m. Can we look at BA? That's going to be it. BA is just in horizontal channel. Interesting enough, it's come sort of in this. I'd still use this as a horizontal channel. Let me. That would be a super aggressive on a close above today's high. A super aggressive %B buy. Boy, I'm getting tired. Whew. It's already been one of those weeks. So, key thing is if you do break below, so this would be a one I keep a really tight stop, because if this breaks down, a quick trip to the 50 and the next breakout level. So if it can't get any follow through above there, which then would be the retest of the highs, if it tries to run some more, the key target area is about 226. So if I were structuring a trade for this, I'd wait for some kind of a buy setup, like a %B buy. I'd target the other side of this to take some partial profits and lock in and raise a stop. Why? Because if it rolls over again, then I've already got my stop raised and locked in something. And if it continues, I'd use that 226 area, which is the 200 on the weekly basis. That's how, for educational purposes, that's how I'd structure a trade with it holding against the weekly rotation zone. And it would be with a tight stop. Why would it be with a tight stop? Because you get a close below this 205 area. There's a clear path back down to the 50 and the prior breakout area. So why I like a trade like that is I can keep a very tight stop. I'm not advocating this trade either. I have to say that because we are not a channel that calls out trades, because I don't know people's risk tolerance. I don't know your time frames. I don't know your level of trading. I'm just going through why I like this, because I can keep a tight stop, so I have a very good reward to risk ratio. I have a key already defined profit target area for the short term. It's rising it's pulled back sideways after a ramp up, pulled back sideways, letting the weekly rotation zone catch up. We have a key magnet target overhead with still some other major toppy price action right up here. You see this? So that's where I'd use a target. So I have a short-term target and a more intermediate-term target and a very tight stop. So that's nothing to do with Boeing. That's just a setup I like in general, leaning against support. Then let's see, Netflix. I haven't looked at Netflix in a while. Hitting the next harmonic area, but this is not a double. I can tell you right now that's not a double. Although if you do break below here in our daily rotation zone, I'd start targeting a bigger pullback on Netflix. And I'd start watching for a pullback to 339. Other than that, there's a multi-week run. So I'd be watching for a pullback pattern with weekly cycles at the top and daily cycles at the top. Other than that, key areas, though, if it were to break down below that 339, you still have a major gap left behind, but I'd focus on that 50 before that at 323. Is it possible the Fed has given, I think you mean given up on jawboning the market, and it'll figure it out between quantitative tightening and rate hikes if they decide to raise the terminal rate? Wait, I don't know, because if the market gets too ahead of itself, it does loosen financial conditions even more, which leads to more potential inflation. So if they just let the market keep running, I mean, the market can do what it's going to do. But I think they're going to try to clarify, because they always stress that data dependent thing. They're going to try to clarify as they get more data what they're looking at. So I don't think they're done I don't know if I call it jawboning. I think they're going to try to correct an over exuberant market at some point, or at least that doesn't mean we have to have the major pullback yet. That can mean that at least it dials down the overall bullishness. All right. Let's see. We're going to have to go over some of these other ones tomorrow, or we should all just trade the 30-year treasuries. It is like watching paint dry. We'll do the SPY tomorrow morning. Well, any significance? Remember, anywhere between the 50 to 62.5 key areas are where we watch for reversals. So that is, yes, there is significance, but does that mean you magically just short it? No. You wait for a decent pattern, which we'll watch for the secondary reaction. Again, SPY tomorrow morning. You're welcome, Donald. So with that, thank you everyone for tuning in. Mike, why does price action move from 12.5 to 25 extension, then reverse and target the other side? For example, double top triggers and confirms, gets to 25, then retraces to confirm a bottom. Why does the price action move? I'm not following your question. I'd have to see an example. If you want to work up a chart, send it to support at Pat Trading Partners. I'll take a look. It's sort of hard to figure out from your verbiage. Remember, the doubles, they use harmonics, but they use different targets. And the 12 and 25 I can still use within a double pattern, but the true targets are the 50, the 75, and the 100% extensions. Thank you, Amit. With that, work up a chart and send it to me, Charles. And I can even bring it up on the live stream. With that, I will talk to everyone tomorrow. Everyone have a fantastic evening. Bye for now.